Welcome. It's episode number 42 of The Rent Roll, your podcast on all things rental housing, apartments, SFR, and BTR. I'm your host, Jay Parsons, and today we're going to be talking about the media and rental housing, or how the media covers rental housing. And of course, there's lots of different types of media out there, and I want to be very clear from the start. This is not intended to be a media hate fest whatsoever. That's not what this is about, nor is that productive at all. But instead, I want to have a healthy discussion on how the media covers rental housing, in particular, what that means for apartment and SFR investors and operators and developers, and also talk about how apartment and SFR investors can help better inform the narratives out there, contributing in a positive way to get the facts out there and responding when the facts are not aligned with reality. So to do that, I could think of no one better to bring in than the great Hiten Samtani. He's got more than a decade of commercial real estate journalism experience, first with The Real Deal, which many of you know is one of the preeminent trade publications covering our industry, and more recently with his new startup, 1031 Media, and his popular newsletter called The Promote. If you're not subscribing to that, you should. So we're going to have a pretty healthy and hearty and candid discussion about media coverage on real estate and on rental housing in particular. And if you haven't heard Hiten speak before, he's very blunt and to the point, but also I think fair. And I think you're going to enjoy the discussion that we have on these topics. And again, it's not going to be one-sided. You're going to hear Hiten call us out because we don't publicly call out the bad apples in our industry enough. And I'll make the same point back to him, which is like those of us in the CRE industry, good journalists won't publicly call out bad reporting unless it's just blatant plagiarism or fabrication, like the famous Jason Blair case of years past. But maybe we both should, journalists and CRE professionals, maybe we both should do that because ironically, whether you're an apartment or SFR owner or a journalist, we all share something in common, which is public perception of our professions is painted and tainted by our worst actors. One bad apple spoils the bunch, as they say. And I think most apartment and SFR owners are trying to do the right thing the right way, and they're trying to take care of their residents. And I think most housing reporters are trying to do things the right way. So we don't want to paint the other side with too broad of a brush because we know how it feels, and that's done to us. But I do want to have a nuanced and thoughtful discussion with Hiten about this. And one thing we'll talk about is the lost art of beat reporting. You know, there's so much turnover among reporters today. It's a brutal industry to be part of. Overworked and underpaid. Few reporters on the CRE and housing beats tend to stay around for more than a few years. And of course, there's consequences to that. It impacts these outlets. It impacts the industry that's being covered. And most importantly, it impacts the readership, the public, and the policymakers who consume the content. And one of the big issues I think is related to this that Hiten and I are going to talk about is the journalistic urge for the both sidisms that can result in deeply misleading reporting. And so a lot of times it's not about bias, left or right, but I think sometimes the pursuit of both sidisms is what unintentionally leads to some misleading reporting. And so there's, in our industry of rental housing, I think there's probably no better example of this than rent control. Too often reporters will ignore or never look at all the academic research and instead settle for simple, landlords say rent control is bad. And a quote from a landlord saying that, hey, this isn't good. Or we see these kind of two-sidisms that amplify fringe voices as well. It's like, hey, we found the 1% of academic economists who disagree with the 99%, but we're going to quote one from each side, so it appears to be balanced. It's one each. But we aren't really telling you that one is disagreeing with 99. So it's both sidisms that doesn't really paint an accurate picture. I remember an article from maybe a year ago when the previous administration, the Biden White House, was proposing national rent control, and the article quoted President Obama's chief economist, Jason Furman, and he was saying rent control was, quote, about as disgraced as any economic policy in the toolkit. And then right next to it, it quoted someone on the other side saying, quote, rent control is sound economic policy. And so, of course, Jason was speaking on the academic and scientific consensus for what the research shows time and again. And they are opposing views. There are opposing views, yes, but there are also fringe views, and it's important to call it what it is. And so this type of both sidisms, it just confuses the audience. You're not informing or educating with facts. You're promoting false equivalency. You're amplifying fringe voices. And I say this all the time, but it amazes me that in this era of, trust the science, we still have this urge to only trust the science that we like. And we don't like what the science says about rent control in policy circles and in some media circles. So we just downplay it, or we don't take the time to fully understand it and digest it. And of course, we know that rent control is an issue that you have academics on all sides politically who have come out against it. It's not a political issue. It's a science issue. I mean, it's the facts are what they are. It's ultimately a policy that backfires on the very people it's intended to protect. So both sidisms don't create good, fair journalism. Facts create good, fair journalism. So Hiten will talk about that later in our conversation too, and he's going to share another real-world example, something that's in the news right now about how both sidisms can mislead the public. A real estate example that he's going to share. And so I think good real estate reporters like him can separate facts from the hot air to better inform their readers and their communities, holding accountable elected officials for espousing disproven policy ideas rather than amplifying them. The megaphoning of disproven policy and unchecked false narratives, via kind of selective quote unquote expert quotes, and kind of cherry pick data points. I mean, that can be reckless. And in those cases, I think, we've editors today maybe set too low a bar on what it means to be accurate, what warrants a correction. What loses trust. It's hard. In fairness, it's hard to cover a beat with expertise because your audience is people who live and breathe this stuff every day. And in the commercial real estate and housing industries, you have readers who are entrenched in this stuff, who know this stuff. And so what loses trust in that audience, or probably true of any beat as well, but what loses trust of those of us in the industry are not typically the honest mistakes and misspellings that require correction, but it's when we see stories with cherry-picked facts and quotes supporting sort of a tunnel vision narrative angle at the expense of critical context, and that results in a deeply misleading article. So, obviously that stuff's problematic, but I also want to acknowledge there's a lot of good reporters out there, and I do believe most are trying to do it the right way. You and I and me, I might not personally agree with everything a reporter writes, and honestly, I probably shouldn't. Because if I don't think it's healthy journalism just to write something that any given person in the space will always agree with, but I can still respect the approach when it's thoughtful and nuanced and fact-based, not taking any side's perspective at face value. So Hiten is a good example of that. So we'll get his take on these topics and also talk about his approach to his new commercial real estate media startup, 1031. So again, if you're not subscribing to the promote and getting that in your inbox, you should. All right, before we dive in further, I want to give a big shout out to our sponsors. First to JPI, a leading apartment developer with a stated purpose to transform building, enhance communities, and improve lives. And JPI is expanding its historical footprint in Texas and Southern California to now other parts of the country. And also to Waymaker. Waymaker is a multifamily investment group focused on attainable housing and Class A market rate apartments, and partnering with best-in-class builders across Texas and the Southeast. All right, so let's jump into, here's a chart. All right, just one chart today, and it's on job growth. I haven't talked a lot about jobs lately, so I wanted to touch on this briefly now that we have employment data through the first half of this year. And, when this data comes out, we get a lot of noise in the headlines, jobs above or below expectations, et cetera. But to me, the real story so far this year is the surprisingly steady job production that we've seen. Now, previously in 23 and 24, we had a lot of volatility in the job numbers. And for those of you who can see the chart on the screen, if you're watching the video, you can see that play out. A lot of incredible volatility month to month in the year-over-year job change numbers. Still a very positive story these last few years, but just a lot of movement from one month to the next. Even when it was seasonalized, the data is being seasonalized, when that's supposed to taper down that sort of noise. But so far in the first 6 months of 2025, the job numbers have actually been consistent in the low to mid 100,000 range. Year over year. And that's not spectacularly hot by any means, but it's steady and consistent. And when you pair it with still low unemployment, it would seem pretty encouraging, especially when you consider all the macroeconomic noise around tariffs and interest rates. So I think that's good news for apartment and SFR demand, and likely feeding that demand that we're seeing. And by the way, speaking of rental housing demand, a quick programming note. We're going to have a deep dive into the mid-year performance outlook later this month. And we'll have with us a special guest, CBRE's head of multifamily research, Matt Vance. All right, next up, rental housing trivia. All right, rental housing trivia is presented by Foxen, a technology-first renters insurance compliance and rent reporting platform that helps you reduce risk and drive NOI. So check them out at foxen.com. That's FOXEN.com. This week's question is, this magazine was founded in 1946 and was the longest-running commercial real estate trade publication in the United States until it was discontinued at the end of 2023. So what was its name? All right. So many of you have probably read this magazine at some point in your careers. So let's see if you remember its name. Next up in the news. All right, a few quick headlines for this week. First one's from my friend Jimmy Atkinson at opportunityzones.com. This headline is House Passes Opportunity Zones 2.0 bill. He writes, by a tally of 2018, by a tally of 218, excuse me, I keep mispronouncing this. By a tally of 218 to 214, the U.S. House of Representatives passed H.R. 1, aka One Big Beautiful Bill. And he writes, when enacted, the bill will codify OZ 2.0 into law and make opportunity zones a permanent policy. So a lot to digest here, but if you want all the details, check out Jimmy's site. But the one key thing here is that opportunity zones are now permanent. They were originally created as a temporary program during Trump's first term in the initial Tax Reform Act, but now it is a permanent program. So congratulations to everyone involved in that policy, and to OZ developers and investors everywhere. That's a big, big win. I've talked about this previously, but opportunity zones have proven to be perhaps the most efficient housing creation program in existence in terms of bang for buck in federal tax dollars. There's some really good research that I've referenced before. If you haven't seen it, comes from EIG, the Economic Innovation Group. So you could find that online if you want to look for it. Next headline comes from Axios, and it's a really interesting heat map. It shows change in population of select age groups from 2020 to 2024. And what was really interesting about this is that it shows, 7 states that have saw growth in the number of children, the population under 18, over that 4-year time frame, just 7 states. And so the first one of those, or 1, 2, 3, 4, 5, maybe it's 6. Sorry, I counted wrong. 6 states, just 6 states. Nope, sorry, 7. Going back and forth in this. 7 states. And so the first 6, I think, are not surprising. We know it's in the water in Texas, Idaho, North Carolina, South Carolina, Florida, and Tennessee. No surprise to see growth in the number of children in those states. But the 7th state, I wouldn't have guessed it. And I don't think many of you listening probably would have guessed it. But it's Delaware. The little state of Delaware is the only other state that saw growth in the number of kids between 2020 and 2024. And that's analyzing some census data. So anyway, interesting real takeaway from that chart from Axios. Next headline and last headline for this week comes from the New York Post. It says New York City's Rent Guidelines Board approves hike for rent-stabilized apartments by up to 4.5%. So I neglected to mention this one last week, so I'm a bit late now, but in case you missed it, as some of you may know, about half of New York City's apartments, actually probably a little around half, are about 1 million units are in the rent stabilized program. And so their rents are determined by the Rent Guidelines Board, which is a group of bureaucrats appointed by the mayor. And so the article says that in a narrow 5-4 vote, the board approved a rent increase of 3% for 1-year leases and 4.5% for 2-year leases that start on or after October 1st. And so it's notable that the board didn't go along with the rent freeze campaign championed by the leading mayoral candidate there, which I referenced last week. But nonetheless, it's also important to note that the increase is less than what the board had previously signaled. So there you go. Lots to talk about there, but I'm going to end it at that. All right, next up, good question. All right, I haven't done this segment in quite a while. This is where I take a question that I get over social media or elsewhere and answer it here on the podcast. But I got a good one that I wanted to bring back here. It's from Kyle on LinkedIn. He asked, this was about California that had watered down its CEQA, which is the California Environmental Quality Act, and what Governor Newsom and the legislature there did was essentially make it much harder for NIMBYs and development opponents to stall or block housing and other developments from getting built. And so I talked about this in the podcast last week, and Kyle asked the question. He said, curious how you see capital markets responding. Are these policy wins in California enough to start shifting investor sentiment in a real way? I'm hopeful, but I think it will take consistent action. So it's a good question, and I agree with Kyle here. I think it will take more consistent action. I think when you combine this with obviously the Prop 33 win, which blocked further rent control expansion in California, I think it'll galvanize groups who are already interested in California and kind of further support, maybe even get more going among those groups. But I don't think it's nearly enough to lure those back in who have previously left or have written off or redlined California. There's still a lot more to do to get national developers and their financial backers interested in building more in California again. And I think one key variable here is not just about the development environment, but also about the operating environment. Still too much of California, may embrace investors when they're building apartments, only to then demonize them once construction completes and operations begin. So that has to change. It has to be a more collaborative environment that encourages more development capital to come back and stay there. So certainly some cities in California are better than others. Obviously, for example, Los Angeles is about as hostile as they come. LA and Berkeley. But some of the surrounding SoCal cities and some in surrounding Silicon Valley cities, for instance, in the Bay Area, California, may be more hospitable. All right, let's go back to our rental housing trivia question of the week. The question was, this magazine was founded in 1946 and was the longest running commercial real estate trade publication in the United States until it was discontinued at the end of 2023. What was its name? And the answer is Real Estate Forum. Real Estate Forum was founded in 1946 in conjunction with REBNY, the Real Estate Board of New York. It later became a national publication covering commercial real estate. And it later became part of the ALM media empire, ALM, and essentially became part of Globe Street. So many of you know globestreet.com. And Globe Street maintained the Real Estate Forum brand for a long time as a print edition, but that last edition was published in December 2023. And if you go to the website now for Real Estate Forum, which is hosted by Globe Street's website, you'll find it's basically empty. And no content since the December 2023 publication. So, again, long time name in the industry and a trailblazer for commercial real estate trade media. And that leads up to our guest today, Hiten Samtani. And we'll continue our conversation on the media and rental housing. Hiten started off as a reporter at the preeminent real estate trade publication, The Real Deal, worked his way up to become associate publisher, editorial director, and senior vice president of content. He left The Real Deal in 2023 and started up 1031 Media, which publishes the Promote newsletter and podcast. So let's welcome in Hiten. All right, now we enter the interview portion of today's podcast, and I am honored to welcome in the founder of 1031 Media and the wildly popular Promote newsletter, Hiten Samtani. So thank you so much for being here.
It's my pleasure, Jay. Good seeing you.
Always good to see you. And you and I have traded a lot of notes over the years. And one of the things that that I really am excited to chat with you about is the lost art of beat reporting, because you've created a real niche here. You know this stuff a lot better than most. So I want to just ask you, to me, and I don't want to put words in your mouth, but to me, as I reflect on the old days of media and having true subject matter experts, do we have that still, or what is your thought on CRE beat reporting?
Well, we do have that, luckily, as a society at large in some places. In CRE, we absolutely don't. And I think the best way to think about this is, we can even do this live. Go to the New York Times commercial real estate section right now. And what you'll notice, just look at the gap between when stories were published and what they're about. So I did this just this morning because I'm pathological like that. There's often 3 weeks between stories. And there might be something like, the Breuer building, landmark building sold. The next one will be about some kind of random consumer-focused story, which is all fine. These are all stories that are important, should be told. But there's no broad-based coverage of what, in my opinion, is the most important industry, or the second most important industry in every major city in America, right? Commercial real estate, if you think about it the way you should, is it's a perfect lens into how money and power works. It's a cocktail of finance, business, development, history, urban planning, celebrity, all of it is kind of wrapped up in this one beat. And the way that it is treated at the major outlets is a frickin' shame, to be honest. So that's part of what has created the opportunity for new players, such as myself. Yeah. But I think it's still a net negative for the cities that we live in.
Absolutely. I mean, I think about, I'm in Dallas, and we had Steve Brown, the Dallas Morning News. He was one of the legends in real estate reporting, because he held the beat for so long. He actually, and unfortunately, recently retired, but he knew the industry, he knew the players, he knew the topics, and there's so much turnover among the national media and I
don't even know where we start with that. That is kind of the crux of the problem. So your Steve Brown is the New York answer to that was a gentleman called Charlie Bagley. And Charlie Bagley held a seat at the New York Observer for the longest time. And then at some point he went over to the New York Times, and he wrote over 1,200 articles about real estate at the New York Times. So he's covered, and these names might be familiar to your audience, might not be, but he's covered the generations of the Dursts, the Rudins, the Lafracs, kind of the people who built that city. And so they can't really put stuff past him, right? He's sharp. He understands. The Rudin scion is not going to lie to a reporter who also talked to his dad when he started, right? So longevity is definitely part of it. But I think there's also an understanding and trust is important on both sides. I think the real estate industry has done a bad job of creating trust with the media, but it also goes the other way. People that you talk to have to be comfortable that you're not going to just go and burn them, and you're going to get the details right, that you understand the nuances of the industry. And I think that's the biggest void in the market right now. You'll have. Is it too early to talk about kind of how the economics of newsrooms work?
Of course not. Yeah.
Okay, so in any newsroom right now, there's basically this talent problem, which is you have one or two people who genuinely know their stuff, who are respected by their sources, who know how to frame a story, etc. They might have been on the beat for 4 or 5 years or more, right? And they have some credibility. At the other end of the spectrum, you have these brand new people who know nothing. They've just come out of grad school or just got their first journalism job on the business beat, and so they know nothing. So they're really dangerous because they'll be told something and they'll think it's news, or they'll be told something they'll just accept it's true. Those are the two extremes, and then in the middle you have all these reporter is not a great word. It's more like stenographers, right? They just kind of keep the machine going. They feed the beast with stuff. So you get diluted with mediocre content that actually drowns out the voice of people who do know what they're talking about. Because there are great real estate journalists out there, but they just get diluted by the noise in the middle of the pack. And so this talent problem and the way that newsrooms are incentivized to just put stuff out and are quite mimetic in their coverage, right? You see something in the Dallas Business Journal or whatever, you feel compelled to cover it in your publication, even if you don't understand it, or even if you think it's not true.
Yeah. No, and I'll tell you, I could tell the difference sometimes. To me, one litmus test is, as a reporter, are they intellectually curious? Are they trying to figure out what's going on? I'll give you credit. Like, you're hosting events, you're talking to people all the time, and you're learning information you'll probably never even use, but you're eating it up. And other times you'll have, and they then kind of craft that. Okay, what's important? What's relevant? You have others that's like, here's an angle, and I'm just going to get quotes to support this angle.
Yes, exactly.
And that there's a big difference. I can
tell you that we'd get notes from editors. I've certainly seen this, and where it's like, here's our story. Can we get Jay Parsons to say this in whatever words it's incredible. And what it does is it creates a nice niche for people who can take advantage of that. But at the same time, it doesn't encourage any intellectual curiosity, any exploration. And so it can be gamed. Right. And I think part of what some people do very well is game the media as well. Yeah.
So let's jump into housing in particular. This is a theory I want to run by. I want to get your take on this. I wonder if in the past maybe media aired too much on the business side of housing, the developers, what they're building, the operators, the business, printing press releases essentially. And at least when you look at the national media now, has it flipped too much to the other side where we don't really understand the business of real estate and housing, but it's almost all about the consumer? Is that a fair, maybe, overstatement?
I think broadly speaking, that is true. I think there is a perception that landlords are money grubbing, powerful people who'll do anything to basically, make their bottom line stronger. That is the broader takeaway, and it leads to a very fundamental misunderstanding, which you can see play out even in New York right now, right? With the Democratic Socialist frontrunner to be the next mayor of New York City, which is a temple of capitalism. But the whole platform that he ran on was freeze the rent. Now, there are so many different layers behind freeze the rent that people are probably not thinking of, right? But the idea has been that for a long time, and there is a lot of justification here, for a long time, tenant advocates, etc., felt like their voice wasn't being heard, right? And landlords had quite a bit of impunity to do whatever they wanted. And I think this is where I think it's important to put some responsibility back on the landlord community, where they didn't call out bad actors, and they saw a lot of stuff that frankly was not above board, and they let it go on and let it go on and let it go on. And guess what happened? Now they're the boogeyman. So anything they do, whether it's a small slip up or it's a genuine act to try to make more housing or whatever, is painted in the national press as, aha, big landlord acting up again, right? And so I think that there has been a very sad fracture of media. So landlords, pro-industry types, etc., have found their own platforms because the national media was ignoring them. So you have LinkedIn, you have industry podcasts, you have all of that. And they're saying stuff that matters to that audience, and it's a nice, valuable conversation. However, the people that also need to be absorbing what all that means aren't listening or aren't reading, right? It's happening in its own silo. On the flip side, what forms public perception and what eventually impacts policy is happening in the pages where business interests are largely ignored. So you end up with a situation where a rent freeze is celebrated without understanding all the unintended consequences of that, right? And you can extrapolate that on and on and on. But I should say, and I should make it clear on this podcast, given the audience, I do not think big landlords, I don't think prominent people in the industry who had a voice for change did enough of a job calling shit out. The traveling HFC program, what an incredible, crazy giveaway that was, right? People did it for years.
Yeah, and I think that's a fair point. I think that, it's one bad apple sours a whole bunch. And I'm of the view, it's like, I think the vast majority of apartment owners are trying to do the right thing. I think the vast majority of renters are honest people trying to pay the rent, and I
100%.
think the vast majority of reporters are trying to cover things the right way. Now, I think all of us have some self-interest where we don't want to call out our peers. You're right. You don't see apartment owners calling out the bad apples enough. You don't see, I would also argue too, reporters calling out each other for bad articles. Correct. Sometimes that happens. Like they're
going to apply for that next newsroom or the next job, right? It's a clubby industry in many ways.
We're all, every industry is, right. We don't want to lose friendships and make people mad. That's human nature. But I think your point is fair too. So I want to build on something else you said, just kind of perceptions, for rental housing specifically. Yeah. I think a lot of reporting, people, we talk about bias sometimes and right versus left. I don't think it's that. I think it's more, again, I'm not trying to put words in your mouth just for the discussion here. I think a lot of it's we try to paint in too broad of a brush. All renters are low income, struggling to pay rent.
Yes.
Landlords are bad. Institutional owners are bad. If institutions exist, that's inherently a bad thing. Rent control is a good thing because it means
BlackRock
people
is coming for your housing. Run, right? It's all of that. Yeah. There's a over-indexing problem, I think, is the primary thing here. So let's take the most recent, let's say the last 18 months or so. Sunbelt multifamily, right? A rush of syndicators come in from out of town, use highly leveraged via CRE CLOs, buying up these buildings, are feed up the wazoo and have already made their money, so maybe are less affected by the actual consequences of running this property, right? So we've seen that, but God, you put that in context for the overall housing market, it's a drop in the bucket, right?
Yeah.
But I think the coverage would be 70% focused on Sunbelt multifamily syndicators specifically, right? Because public perception is shaped by flashpoints. It's not really shaped by someone who's a little good or a little bad over time, right? It's shaped by Harry MacLeod going in the 1980s and doing a midnight demolition of the SROs. It's shaped by someone coming in from New York and buying up a Baltimore housing complex and doubling the rents. It's shaped by Stuytown, which is a major national story, and the whole rent stabilized battle there, right? It's shaped by traveling HFCs, right? So these are the things that create the perception of landlording as it is. And then it takes years and years and years of education by people like yourself and others in the industry who are using data to show what the reality is, to even unwind it slightly.
So I would ask you, so since you've been in the industry, covering the industry now for 12 plus years?
Decade-ish, yeah.
Does it change your perspective at all? Like when, for those of us in the industry, we'll sometimes see a story and we're like, again, it's not that it's wrong. It's just like, it's not framed correctly. The angle is incorrect. Does it frustrate you like it does us when you see these things in print?
To no end. It really is. It really is one of my pet peeves, and I have to also. I should say that is also the opportunity for 1031 and for the remote is like we can seize in on the framing. We're not a massive newsroom. We didn't set out to break news. Even it's happened. It's funny because we frame things in a way that the industry appreciates. We also break a lot of news as a result, as a byproduct. This was not us trying to replicate newsrooms, because newsrooms exist and they do what they do. This was us saying, what can be the most relevant publication in the space that's also a great read or a great listen, depending on your platform. And so part of it is like, someone will default on a property, right? And it's one property out of thousands that they own. And the headline will be something like, is the other shoe about to drop for XYZ? Like, dude, these are all discrete LLCs. They've just gone and done this. And the week after, they've raised a new fund, right? They're okay. They're doing fine. There are people in trouble, but you have to look for patterns. You cannot create these flashbang narratives all the time. But that's how people work. That's how newsrooms work. And so there is an opportunity for someone to come in and say, okay, can we just focus on the actual issue here? Can we just agree that putting in new tenant amenities did not change leasing in this market? All right. Like, can we just agree on that? Can we talk about demographic changes and the spread between buy and rent? Like, those are the things that actually move the needle, but those are boring, right? And I think one of the biggest challenges for any newsroom is creating interesting coverage out of the things that actually move the needle.
Yeah, well, and I want to give you some credit on this topic because you mentioned like flash topics and coverage moves the needle. So I'll give you a real life example of, I think, how what you do is different. There was, when all this tariff stuff happened, and regardless of what you think about tariffs and politics, that doesn't matter. Like, so what matters is how it's covered in this context. What we're talking about, there was an article in one of the big outlets that came out and said, "Hey, this is a great thing for apartment developers, and they're getting this lucky break."
Just for your listeners, I'm gesticulating wildly as Jay talks, in case you're not watching this.
So and then even the trade media starts picking up on this idea that tariffs are going to lead to a drop off in construction and therefore much higher rents, much higher construction costs. But to me, that reflected, again, going back to the beat reporting, a lack of just not being in touch with the industry, of understanding that, first of all, what the impact really was, and second of all, that the drop off in construction occurred long before. And so this whole narrative that got spun, including a lot of your peers, your competitors, your other trade picking this up, and it wasn't an accurate reflection of reality. And I think what you have done really well is it's not just chasing the headline of the day. Like you're getting a better pulse on, again, what you kind of talk about, kind of the water cooler topic, which wasn't that.
Right.
So
I think anxiety is one of the most important incentives that is not really understood. You're an editor at a major publication. You wake up, you open the newspaper, it's all about the tariffs. You're watching the TV, it's all about the tariffs, etc. You go into that editorial meeting, people expect you to say, okay, what's our angle into this story, right? And so you come up with a flashbang narrative. You call some random developer who might have a vested interest, or worse, a broker who has no macroeconomic expertise whatsoever, just wants to get in there, right? And he's a call away. You get in there, this person gives you a really spicy quote that you can use in the headline, right? Like, this is Armageddon for multifamily developers, or this is a boon for multifamily developers. Both were bullshit, right? Because the tariff talk and the panic was very real in the financial markets. But in the real estate market, I'd argue that we still don't know what it's going to do. And we should just say, I think when we did our podcast, Will and I, are my co-host on the Promote podcast.
Yeah.
This was our tariff discussion. I'm going to recreate it. Hey, so Will, we got to talk about the tariffs. What do you think is going to happen? His answer was, I don't know. That was the end of the discussion. That was it. Because the important thing was the intellectual humility to say, no idea, right? But when you have a publication that's being read daily and you have 25 items that you need to put up, 4 of them better be about tariffs. So you could also do this as a fun kind of exercise if you want to break your brain. Go to any outlet you can think of and pull the last 5 stories on a topic, and they will often be opposites. They'll often be saying the opposite thing. And nothing's changed except the writer and the day.
Yeah. Well, and to your credit, for you and Will, it wasn't just you guys. I'll tell you, one of the biggest players in the commercial real estate industry, Blackstone, their earnings call, they mentioned the word uncertainty 11 different times. And honestly, when I present on this topic, I tell people, look, That's the biggest risk. It's uncertainty. So saying I don't know sometimes is the right answer. So kudos to you guys for that.
I appreciate
for our audience here, what advice can you give those in the industry who are kind of frustrated by narratives and trying to get the facts out there on hot topics like, rent control, institutional ownership, affordability, evictions, et cetera? What would you tell them if they're trying to fight that good fight?
I would say there's a one is a tonal thing. There should be less anger and indignation. I think developers and landlords, by and large, are in a very privileged position, and this is a good thing. They should use that platform to talk to people and educate people as opposed to scold people, right? Forget what housing advocates and tenants do. Forget that. The conversation here should be respectful. It should be data-driven. It should be consistent. And I think one thing that people forget, and I think you're a very, very big exception here, is stamina is such an important part of messaging. You just got to keep saying the stuff over years and years and years. People try, their LinkedIn post didn't work out, they didn't get any likes, they stop, right? Yeah. Everyone starts podcasts. It's the barrier to entry is 0, but people generally fall off after 5 episodes or 8 episodes, et cetera. You're, I think, touching 400. Kudos to you. I'm not sure where you are, but the idea is that you need to be consistent, you need to be clear, and you need to not talk down to the people you're trying to influence. And the good news is you have a lot of different mediums to do it in, right? So you have social media, you can strike up relationships with people in the press. They would like to hear from you if you have something interesting to say, and you just have to kind of keep at it. So that's one part of it. The other part of it is developing some kind of reliable, I don't know how to, maybe the best word for this is artifact. I think one of the smartest things that a company ever did, have you heard of Castle Systems and the back to work barometer?
Oh yeah. Yeah.
Now you can say, I mean, I quibble with their methodology, but I think it's one of the most brilliant pieces of media marketing that I've ever seen in the space. During the pandemic, for that 3-year period where we didn't know where office was going, every major outlet would quote the Castle back to work barometer or whatever it was called. There are equivalents that very smart people in the industry could make, right? If you're of a certain scale and you have all the data, you see the whole board, as it will. Create something that is repeatable, that people can come back to. Reporters, by and large, are quite lazy. They want to come and, okay, all right, this is what, the Parsons Index said in September. What does it say in December? Let's compare, right? And that's how you kind of create long-term influence in the media.
That's great advice. All right, so we've touched on this a little bit, but let's talk about your business and your background. You developed a real niche, I think a very unique position, and you're someone who's really developed, spent the time, the energy to understand the business of commercial real estate, its players.
I just love it. I just find it really interesting, so it's a little easier.
And but you can see that just in your writing that you love it. It's genuine. And what I appreciate about you as well, I think the best media, and even like what I do, like research analysis, it's all the same thing. It's like, it's understanding the shades of gray. Everything's not black and white. There's nuance. I love the nuance. So how did it all start for you? I imagine you didn't just grow up as a kid thinking, man, I'd love to cover commercial real estate, right?
Completely. Yeah. When I went in for the interview at The Real Deal, where I started my career on this beat, I didn't even shave because I was like, what is this? I've never heard of this beat. I've never heard of this publication. You go in. It started from necessity and it became love very quickly. So I was on an H-1B visa, so I needed to stay in I was on an OPT right after I graduated from Columbia, and I needed to stay in the US, so I needed a job in my field. The Real Deal, to their credit, was willing to sponsor smart international students. So I said, you know what? Get in there for a year, be good, do what you got to do, and then go find what you really want to do.
Yeah.
I think by week 2, I'm like, holy, this is the greatest beat in the city. It has everything. If you're in the center of New York, you're in real estate in some way or the other. And we talked about this on our podcast last week. It is kind of the origin or the destination, and sometimes both, right? Your money from finance flows into real estate. Your money from real estate flows into different ventures. It's just such an incredible nexus of everything. So I caught the bug very quickly. I was in the right place. I think I was in the most dynamic news organization for this beat. And I went very quickly from there to developing our voice and building out the newsroom and scaling TRD to a lot of what you see at TRD is stuff that we kind of put in place. So that's how I started. This went on for a number of years. We did some incredible work, I think, and I started to fall more and more in love with something. I think a lot of newsrooms or a lot of journalists do the typical career path for a journalist has been sit on a beat for 2 or 3 years, make your sources have some impact, move to the next prestigious beat or the next prestigious publication, etc. Now, I understand why they do that, but I think there is a lot more rewards, both financially and intellectually, to just kind of keep going deeper. If you found something you like, just keep going. Just keep going. So got to that place with the Real Deal. And then I want to say during the pandemic, I started getting a lot more restless about what I wanted to do next. This is just on a personal level. I wanted to create my own thing. I wanted to have my own voice out there. I thought we had a compelling message to offer. And then I also wanted to obviously have the equity. One thing I've learned from real estate people, and which I admire very greatly, is they're always looking for ownership, right? Brokers are looking for this, developers, obviously investors, etc. You need to be able to own your destiny, even if it's a smaller, you're starting off with a much smaller pie, but eventually that will play out in your favor. So it took me about a year to kind of frankly get the balls to go out on my own. I was a journalist. I wasn't a business person. I didn't understand much about sales or operations, etc. But I knew that we had a very compelling thesis, and I wanted to test the thesis out. And the whole idea with 1031 Media at Large is if you can prove this out in one vertical, which is commercial real estate, the same thing will apply to other high-powered verticals that we're looking into in the future. And the idea and the thesis for this is, in general, the way that the industry talks about their industry, what they care about, the tone, the specificity, the level of detail and color, and what the media writes about that same industry, the gap is massive.
Yeah.
So the simple thesis for 1031 was, can we just shrink that gap, right? And so you will notice from the promote, it is highly irreverent. In some cases, it's a little crass, etc. But we never, ever, ever sacrifice the nuance and the technicality of the beat. So we'll write about capital stacks and we'll write about mezz positions and first liens and whatnot, but we'll do it with GIFs and graphics, etc. So people are, in the industry, especially the up and comers, I like to say that we have the most captive audience of VPs and SVPs in the industry. Like people who are in their 30s, starting to make real money and grew up digital natives. We have all of them, right? Across all companies, from the Blackstones of the world to the Mubadlas, all the way down to kind of the striving brokerage types. They appreciate the level of nuance and candor that we have. And they appreciate that we never sacrifice the actual understanding of the beat when we do it. So that was the whole thesis here.
And the nuance, like that's the key word. It's the nuance. It's not the just reprinting press releases, nor is it just the industry bad sort of stuff. You get
exactly
the nuance. So let me go back a little bit. So going back to that time, I love your story about how you've and for those listening, you get more of the story when on Chris Powers' podcast, The Fort. You shared a lot more there. But I wanted to ask you, in those first few weeks, if you think back to the newbie beat reporter covering commercial real estate to where you are now, how is your perspective, your predispositions, your view of commercial real estate and housing evolved from the time you started to where you are now?
I would say I was fairly capitalistic to begin with, so I've always enjoyed the game for what it is, and I generally, our rule at 1031 is we judge the industry by the rules that they set, as opposed to what some other class of people set. And I bring this up for a reason. We are an insider-focused publication to the deliberate exclusion of outsiders. I do not recommend reading Just Us to get your perception of how all of this works and what, we are. There's a lot of power in telling someone, hey, this is not for you. So I hope it's still there, but I think our slogan for the brand is not for a general audience. And the not is really important here. We are for insiders. So when you go in with that lens, then you can kind of talk about everything that really matters to the industry. Now, back to your question. I think there was a lack of understanding definitely on my part when I started, just how important the industry is. I luckily started picking up the shades of it right away, but there is no thriving city without a thriving real estate industry. It does not exist.
Yeah.
It just cannot happen. So a good example, maybe on a smaller scale, is what's happening in San Francisco right now. Mayor Lurie stepped in, very pro-business. I know he's celebrated by a lot of our peers. And he was going through a list of his wins on LinkedIn. All right. And what I was struck by, I think he listed like 10 things that they've been able to do. What I was struck by was 8 of them were real estate things.
Yeah.
You know, we leased this trade happened, this development was announced, this tax financing or something was like we created, etc. I'm like, these are all real estate focused wins.
Yeah.
And there's a reason for that. So I think there should be respect for the industry without reverence.
Yeah.
And I think
agree.
what a lot of people do is they revere the industry. Everything that developers and landlords say is taken as gospel without understanding that they're salespeople who are spinning a certain narrative. And so that's what the trade publications often look like. They're full of like misinformation to a point that's very frustrating for a tenant advocate or a housing advocate or anyone who's just trying to understand this industry on its merits. So I would imagine, like, I would almost give you, or I would almost put this point forward that the misinformation in the major publications that shape consumer perception is matched by the misinformation that you see in the trade publications.
I agree. No, I'll
one is serving the industry, one is serving tenants, but they're both bad.
Yeah. Well, they both have their angles, right? I mean, like if your view is through the rental housing is through tenant advocates who only deal with the with people who are unfortunately experiencing very real challenges, it's going to skew how you think about the whole industry. If you think about the industry only through press releases, it'll also really skew what you think about
100%.
the industry.
I mean, think about the rent stabilized. Just bringing it back to New York for a second. Think about the carnage that's happening. Not even what's happening with the mayoral candidate Zoran, etc. Think about the carnage that's happening in the industry in New York post 2019 rent reforms, which I'm sure I know it's not your market, but I'm sure you've been following this whole thing closely. The 2019 rent reforms were a major overreaction, but that word reaction is important. The stuff that landlords were getting away with in New York was egregious, right? I mean, you're having forced buyouts, you're having really misleading conversations about tenant rights, you're having just frankly people getting displaced at a level and living conditions, etc., that was so bad that created this groundswell of support for what are, I believe, very radical and damaging laws, right? It came from somewhere. It's not like a tenant advocate woke up one day and said, you know what, I think I have the juice to pull this off. This happened because the extreme examples were such that the head of the real estate board in New York was once in the Senate chambers writing pro-industry legislation when he calls a reporter for the New York Times, almost like a flex, from the freaking chambers. Like, how brazen is that?
I remember that. That's crazy.
How stupid is that, right? Like, you hear of these stories over and over and you realize this is where we're at because of all these things that happened, right? This is not a good situation to be in. I think the industry and the tenant community need to have a little bit more of a shared understanding of what the business looks like for both sides.
No, I agree. I think that's, I always tell people it's collaboration over demonization coming from both sides. So,
100%.
So I'm going to go back to your story, though. So were there any for you, as you started off in this beat, were there any stories that you did or were involved with that just kind of fed that love and kind of drew you in deeper?
100%. And I think I believe you're a former journalist, right, Jay, at some point?
Yeah. Briefly, yeah.
Like, looking back at early clips is a very embarrassing exercise, right?
Yeah,
like,
it is, yeah.
What you think was great, it may not be so. But I remember doing a story about Hudson Yards, a mega project in New York, and the financing that came together for that project. And I spoke to the lawyers, I spoke to the investors, I spoke to the lenders, etc. And I put together this thing. I'm like, oh my God, this is the level of financial jujitsu it takes to put what will define a neighborhood / a city, right? So when I did that story, this was maybe 9 months into my career at The Real Deal or so, like, oh, okay, this is the first piece I've done that I feel like I did something, right? So that was a very important one. On the more frivolous side of things, and I told this story on Chris's podcast, but it's a good one. I went to a bris, which is a circumcision ceremony. And in the Jewish community, when you invite people, it's a big honor. You show up, and they're often held in these like Manhattan boardrooms. So here I am on the 30-something floor of a Manhattan boardroom, and there's a throne in the middle, and the grandfather sitting on it, and the baby sitting. I'm talking to a lawyer that I know, and I say, how's it going? Blah, blah, blah. We're chatting. He's like, it's just another day at X, Y, and Z. When you're a journalist or a media person who's someone who enjoys narrative, you just kind of wait for these moments of characters, color, quotes that light up an industry, right? Make it come alive for you. And I think that real estate, for all its flaws, for the way it's been shunted or the way it's been kind of marginalized in coverage, has the most characters per capita of any industry by far. You're talking about cowboys who had to wear suits, but they're cowboys, right? Like the core real estate person is the guy from A Man in Full, the Tom Wolfe book, right? That's who real estate people are. They're wildcatters, buccaneers. They're betting on themselves over and over. They're taking an incredible amount of risk. They're making things happen. They're the word that Walt Disney always used was Imagineer, right? And I think, not to blow smoke up developers' ass, but the best kind of developer is imagining a scenario, imagining a city, and then going out and doing whatever she needs to do to build it. And I think that's really cool.
Yeah. Well, so that draws me to another topic then, because you mentioned, kind of these moments of just the personalities, the drama, the moments, and that reminds me of something that, again, I know I'm giving you a lot of kudos, but I invited you on this podcast for a reason. I like what you do, but you do
I'll take the kudos.
You do a good job, I think, straddling the line of covering the people and the personalities. We have some big personalities in this industry, and it gets ugly at times too. But you're not like, it's not the malicious sort of page 6, crazy, nonsense. So I'm curious, like, how do you think about that line? And being I would say, like, doing real journalism versus
it's the hardest question, by the way. Yeah, go on.
Yeah, but well, that's it. I mean, but how do you think about it?
It is probably the trickiest balance to figure out. Is how do you have fun without being snarky or without being malicious? And I think the idea is no malice, no snark. Judge people by these rules and these rules only is a very important principle for 1031. And as we grow and as we scale, I think one of my biggest challenges will be communicating that to the team, right? It's really hard. You have to kind of develop a radar for when too much coverage is too much coverage. And it's hard for people to do. I think one of the big problems in trade media is, like, you get a big syndicator, Tides Equities, or you get a big scandal, the mortgage fraud scandal, etc. And then every whisper becomes news. And I don't think every whisper should be news. I still think there should be a bar to which something needs to rise. So I came across traveling HFCs. I'm like, this is the most unbelievable story I've seen. So we actually blanketed the field with traveling HFC coverage. And it was fun and it was playful. And in some cases, we were, taking a few shots here and there at people. But it was always in the context of the industry. We don't typically get personal. We don't talk about people's families unless, again, it's relevant to what we're talking about. And even though this is the hardest thing for a publication, I know I can go write an article tomorrow that will get double the open rates or double the clicks that I normally do, just by framing something in a little more salacious or a little more thing. But I think the long-term institutional credibility gets damaged by stuff like that.
Absolutely.
And that's what you have to kind of shy away from. And I don't think that all publications necessarily hold themselves to that standard, because the reporters cycle in and out, the editors cycle in and out. There's a famous line in back in the day, which was like, news is what Bob tells Paul, talking about these two very prominent agents, right? And so you have to develop a radar for knowing when you've over-indexed on coverage or when something deserves more coverage. Traveling HFCs, when the promote started covering it, were not sexy. They had been written about a couple of times here and there. And then we started covering it, and then everyone came in and started understanding, oh my God, this is a massive deal. So it's a very hard balance. I'm sure I mess it up sometimes as well. I'm sure that we as a publication have not always got it right. But the whole idea is, like, what does the industry really need to know? Elon Musk moving, his moving or saying he's going to move to Texas or whatever is not a story. It should not be a story in commercial real estate. But the siren song of that kind of headline is very hard to resist.
Yeah. Well, I think just thinking back to some of the things you've written about, like, I think what you've done is you've shown that you can you can have an edge without being just negative. And we joke about, if it bleeds, it leads. But I think sometimes it's like, it feels to me like there has to be a negative piece to any story. And you mentioned I did start my career briefly in journalism. And one of my biggest regrets was a story I initially was very proud of. And it was a real estate one. It was about this, it was about a development community. And it had used this water district concept to form. And one of the foundational ideas they used was that they were going to, in the deeds of the homes that were sold, and every time a house was sold, a small portion of the sales, I forget the exact percentage, would go to support the local schools and kind of to try to build a better school district. And so I remember my editor said, "Hey, look, this could be a Sunday front page story if we find people who are upset because they didn't realize this was in the deed." And I thought, okay. And so we changed the angle, and I had to call the guy back and say, "Hey, look, I need you to comment on this, why you're doing this, and it's people don't know it's there, and yada yada yada." Even though they should have, it was obviously disclosed, but not in big enough print or whatever. And looking back on it, it was one of my biggest regrets because you know what? It's like, was that really necessary? Like, yeah, it was.
It became an ambulance chasing story when it wasn't that, right? Initially.
Exactly. And so I guess what I'm saying is like you had that edge without having to like make it just negative. Like you don't have to be negative to be interesting.
100%. I mean, I think you need to have what makes people interested in coverage is when the writer or the creator or whatever is interested, right? I think the most interesting people, this is now me getting a little zen about this, but the most interesting people in the world are also the most interested people in the world. If you're passionate about something, if you want to understand how the sausage is made, if you want to understand all the little pieces that go into something, your coverage becomes interesting. There's just like you don't have to be spicy for spiciness sake. So I'll tell you something that happens in newsrooms that may shock you, and that sucks. Someone will write a story dry. So they'll write a story based on like, here's the facts, here's what Bob said to Sue, etc. They'll go through it, they'll have their 600-word piece. Then they will go in and say, okay, what can I do to, zhuzh up this sentence? What can I do to add a little spice here, whatnot? The initial piece is unreadable. The latter piece is unfair because the core of it, the spice was not baked into the mix as such. It was added on top. And I think that is what leads to some of the worst coverage by and large across the media, and specifically in real estate media, is that someone will go in, write a piece based on and then the angle will come in, or the editor will be like, this is too dry. Let's, what else happened? Oh yeah, this person, didn't they get some arrested a few years ago about some unrelated topic? And then the final story that goes out has all those biases, has all that baggage in it. And so the good part about coming up in newsrooms and seeing how other newsrooms operate is you can kind of create a playbook for what not to do with this stuff. Yeah. Right. And you can say, okay, what journalistic principles actually matter? Forget what your overweight editor with his blazer and the elbow pad said 20 years. What actually matters? Fairness, right? You have to be fair and you have to be accurate. Every single journalistic principle outside of that is bullshit.
Yeah. No, that's well said.
It's irrelevant. It doesn't matter. Objectivity doesn't really matter. Getting both sides and proportionate doesn't really matter. None of that really matters. Yeah. Are you fair and are you accurate? That's it. So those principles can apply to anything. You don't have to be a newsroom or journalist to take them. Just use them and have fun.
Well, I'll tell you, you just hit on a pet peeve of mine, and I don't mean to get us sidetracked here, but I'll tell you, Please. This is what drives me nuts about rent control coverage. It's like there's this both sidisms of like, hey, regardless of 98% of the science and the research says rent control is bad and it backfires people it's tended to protect, the coverage has to reflect people who are science deniers and make them look as like it's a more fair story because it has both sides portrayed equally. That's not good journalism.
It's really not. And I think I was about to DM you this before we got on, but there was something related to Measure ULA, which is the mansion tax in Los Angeles that came up. Mansion tax, complete misnomer. I think there's been a study in UCLA recently that shows how detrimental this has been just to the overall real estate market, et cetera. But you'll have quotes in publications. I think there was one today that I was trying to pull up. Oh,
It's
yeah.
the New York Times.
This
I
is
saw
a quote.
it. Yeah.
Is it in the New York Times? Let me pull it up.
I saw someone
It's in
tweet
the
this
LA
out.
Times. It's in the LA Times.
Oh, I'm sorry. LA Times. Yeah, sorry.
This is a quote. Don't believe the hate from big money real estate or their lies appearing all over the media, one of these housing advocates said. Measure ULA is doing the steady work to create stable homes and good jobs for Angelinos. Now, this is if you were in court, you could get perjured for that because it's just not true, right? It's just not true. The one of the people who came up with this law, Councilwoman Nithya Raman, she basically admitted that the name mansion tax was a bait and switch, right? This is like an objectively bad law. But and so I don't even want to debate this stuff about, I'm not a policy expert, but we've seen the evidence. Yeah. But when the LA Times reporter is writing about this, if they include this bullshit quote, they absolutely need to have here is what the actual research shows, and they don't do that.
Yeah, no, I agree. It's too much of that. And I think that's honestly goes back to our first topic, which people don't stay on the beat long enough. I don't think it's an intentional mistake sometimes. It's just like they don't know. They don't know enough. Or they don't know,
but also these beats, I think, we started off the conversation looking at the New York Times commercial real estate coverage. There is no cohesive plan in most of these newsrooms, the trade publications and the major publications. There's no cohesive plan to cover real estate. There's no sense of, okay, what are the 5 different groups that we need to be thinking about? Let's say landlords, lenders, brokers, advocates, etc. All right, who have we got on these? Who are the relationships that we need to have? What do we need to do to get in front of them? How do we learn about it? There's none of that. It's a New York Times real estate editor will step in and completely overhaul the desk to focus on lifestyle issues. Right. Yeah. And I think this is the broad reason I suspect one of the reasons you wanted to have me on is this underlying problem is that by and large, big media has abdicated its responsibility to cover real estate effectively. It's either treated as like a really dry MOIC and IRR and all this stuff that no one can really get their head around, not even real estate people, or it's treated as a lifestyle beat. And that's missing most of the action. It's missing most of the impact of this industry.
Yeah. IRR, 1031s, et cetera, just to drop up your...
Well, I did call our company 1031 Media. But
no, yes. But that's perfectly because you're, again, trying to, who your audience is. So that actually, before we go, I want to ask you this question because when you obviously call yourself 1031, you've made a real effort to say, I know I'm going to have this narrow audience. And that means you are putting yourself in a position, your audience, your customer base, people who live and breathe this stuff every single day. Mm-hmm. And that means that you are in a position, you're going to be judged by people who know this stuff intimately well. So how...
Yes, it's a scarier bar to cross, yes.
Yeah, so how hard is that? How do you do it?
It's a little nerve-wracking, right? Because you're talking to subject matter experts. So they know the stuff. They can read a rent roll, they can underwrite a deal, etc. But if you're going to start a publication that doesn't... Any new publication, it's quite easy to be a little bit better than the other publication because you can just focus in a little bit. But to start a new publication and to gain mindshare, which is the hardest thing in the world, you have to be radically better and you have to be ubiquitous at the same time. I think initially I thought, okay, can we do a once a week thing that's just going to be better? But that was not going to kind of get into people's consciousness in the same way. So we had to be radically better. We had to develop kind of a deeper level of sourcing with people. So I have 4 or 5 different platforms that I'm using all the time. I've started to I'm starting to build out the team a little bit. Thinking about all these things is hard. It's hard. When you're a specialist publication, the bar is higher, but the rewards could be higher too, right? We're going to start subscriptions in the fall. I would imagine that people would pay more for our stuff than they would for the average publication.
Mm-hmm. Well, congrats again. You've become, as you set out to be, the water cooler of commercial real estate. And so love what you're doing. And if for anybody listening who's not already following the promote, you definitely should. And of course, you put some excellent stuff on X as well. So Hiten, thank you so much for letting me banter with you and pick your brain and commiserate a little bit as well and learn from you. So appreciate you making some time for us.
Hey, it's my pleasure. And I think this is a really important important topic. I think the way the industry is covered impacts the way that our cities are shaped. And as a fan of our cities, I would like this to be better. And yeah, people can find us at thepromote.com or the Promote Podcast, which is quickly becoming its own thing and really exciting as well.
Well, congrats. Well, thank you again.
Thanks, Jay.
And that's a wrap on episode number 42 of The Rent Roll. Big thank you to Hiten for joining us as this week's guest. A quick programming note, we're going to be off next week, so no episode next Thursday, but we'll be back the following week and then keep it going through the rest of the summer. Again, big thank you to our sponsors, to JPI, to Waymaker, and to Foxen. And thank you to all of you for spending part of your day with us. We'll see you next time.